Assalamualaikum warahmatullahi wabarakatuh. My name is Imran Nasir. So today I would like to give a introduction to our topic for the case study, which is TESCO accounting scandal. TESCO Private Limited Company is a British multinational groceries and general merchandise retailer headquartered in England. TESCO was once one of the biggest grocery retailer in the world until they met their downfall back in 2014. On the 22nd September of 2014, they came to light that TESCO were heavily involved in a accounting scandal which happened between February to September. The scandal was that TESCO has overstayed its profits and booking payment from their suppliers before money had been paid, thus causing the business type of status profits rose by £250 million. In this case, it highlights that the term financial statement fraud is all too familiar. Financial statement fraud is a type of fraud in which managers intentionally manipulate the financial information in the financial statement to deceive the stakeholders. In this case, 3 senior managers involved in the scandal manipulating the accounting practices that result in the overstatement of profits by £250 million, which actually has been revised to £326 million. And then it can also be related to the tone at the top, because tone at the top was actually an ethical values and culture established by the top's company management, which includes the CEO, CFO, and other executive officers responsible for the overall direction and management of the company. Unfortunately, the TESCO scandal highlight how senior management neglected the tone at the top concept by focusing more on maximizing the company's profit through manipulating accounting practices, and this actually setting a bad example for the employees. The emphasis on financial objective by neglecting the ethical values and the ethical culture that they were supposed to adhere to may also produce pressure for them to accomplish great results, resulting in a lack of attention to educate accounting procedures and internal controls. The 3 senior managers involved in this case failed to stay true to the ethical values that they were supposed to develop for the overall direction of the company, eventually leading to a massive loss. And then when we talk about the management and the owner, they come to light that asymmetric information is another significant issue in this accounting scandal. It occurs when one party has more or better information than the others, leading to deceiving actions and moral hazards. This asymmetric information involved the principal and agent. The principal in this case was the shareholders, and the agent in this case involved the management. This imbalance of information can result in the worst outcome for the party with less information, which is the shareholders, as they cannot make fully informed decisions, while the party with more information may have the choice to exploit the information imbalance for their benefits, which is the 3 senior managers involved in this case. And then when we talk about the 3 senior managers in this case, it relates to the human biasness. Human biasness refers to the tendency of individuals to act or to make decisions for the benefits only for themselves. This biasness in the context of agency relationship was the personal interest. Personal interest can conflict with the interest of the principal, leading to what is known as the agency problem. This means that the individuals may patronize their own personal interests over the interests of the company they work for. In this case, 3 senior managers involved has another interest, and the interest is not aligned with the interest of the shareholders or the owner of the company, which is the shareholder of the TESCO Corporation. The individuals patronize their own personal interests and ignore any ethical values that they were supposed to adhere to. This is exactly what happened with Chris Bush, Carl Rothberg, and John Scholar, who were the senior management of the company. They had a personal interest in maximizing the company's profit to receive an increase in their increment or their salary, or to show that they had done a good job in managing the company. Their biasness in maximizing the company profit put pressure on the management and staff to overlook the importance of adequate accounting procedures and internal control, resulting in the misrepresentation of information in the company's financial statement. And this shows that they have breached They are fiduciary duty that they were supposed to adhere to, or they're supposed to follow to. The fiduciary duty of directors is to act in the corporation's best interest or to the best of the shareholders. They have to done a very good job with the utmost knowledge and belief, and to avoid conflict of interest between the corporation and personal interest, and had to exercise their power expeditiously. In this case, it shows that the three senior managers completely breached their fiduciary duty to the company, which put the corporation in a loss side at the end. Okay, now so we come to the part 2, which is the explanation about the accounting scandal that we choose, which is TESCO in the United Kingdom. The fraud involved overstating a profits by a staggering £250 million. This was achieved by manipulating the company's financial records and inflating the sales figures. Several senior executives, including the CEO and CFO, were involved in this scheme, using various accounting tricks to conceal the true state of the company's finance. The fraud was carried out by three individuals, Chris Bush, Carl Rockberg, and John Scholar. All of them were charged with fraud and false accounting back in 2016. These former TESCO executives were the mastermind who rigged records, intimidated, and pressured employees into falsifying data. And they also lied to the auditors, which is PwC in this case, to boost the faltering supermarket earnings. They are accused of pushing forward or unlawfully acknowledging income from suppliers to boost TESCO's 2014 intermediate profit prediction. Between February and September 2014, they are also accused of manipulating accounting records and withholding information from the auditors. Their plan was actually to recognize revenue early, and they delay the recognition of expenses to increase the profit, and then they carry the shortfall to the next accounting period. In carrying out the plan, loopholes in the accounting standards were exploited by them, and the company's financial position was deliberately misrepresented to auditors and investors. The fraud was not discovered until September 2014, when an internal whistleblower reported suspicious activity to the company's board of directors. An internal investigation was launched which uncovered evidence of the fraud. The fraud was covered up through a series of actions, including manipulating internal control of the accounting systems, deleting incriminating emails, and providing false information to the auditors. The fraud was also concealed by the company's senior executive, who made misleading statements to the public and investors about the company's financial position or the company's financial condition. The TESCO incident was comparable to other accounting disasters such as Enron scandal in the United States and Satyam scam in India. In all these cases, financial information was purposely misrepresented, resulting in an overstatement of earnings and an underestimation of liabilities. The TESCO accounting scandal served as a stark reminder that corporate fraud can happen even in a large and seemingly reputable companies. It highlights the importance of strong internal controls, independent audits, and ethical leadership in ensuring that financial statements accurately reflect the company's true financial position. And then we come to the question, who is the whistleblower in this case? The fraud was initially concealed through complex accounting methods and internal control manipulation. Even the external auditors, which is PwC in this case, failed to detect it. The senior management, including the CEO and CFO, were aware of the fraud, and they put considerable pressure on staff to conceal it. It was only through the efforts of an internal whistleblower, who has been named as Amit Soni, that the fraud was eventually uncovered. We can actually assume that there has been an internal whistleblower other than Amit Soni, but the one who stand up and testified against the court was Amit Soni. The top financial officer, Amit Soni, as a senior accountant of the company, alerted management to the inconsistencies, and an inquiry was launched about this scandal. In this incident, Amit Soni, as a senior accountant at the TESCO Corporation, testified on behalf of the prosecution before the Suffolk Crown Court. In the case against all three persons charged with one offence of fraud by abuse of position and one count of false accounting. His action ultimately led to the company submitting a statement to the London Stock Exchange, reducing the company worth by £2 billion. This scandal served as a reminder of the importance of transparency, honesty, and integrity in the managing the company.
Hi, my name is Aidil Ihtisyam and I will present over the pressure, opportunity, and responsibility. In UK-based grocery chain TESCO situation, where there accounting controversy, when the number pressure, opportunity, and resolution that have lead the farm. First, pressure. Fear capital in the retailer sector is one of the pressure that may affect the farm competition. This may be because TESCO faced fear capital from another supermarket chain, just as Morrison, Aldi, and more may feel the pressure to achieve ambitious financial goals, just as those relate to sale and profit margin, even keep price low and maintain high level customer satisfaction in order to maintain the company potential in the market and meet competitive inventory. In addition, there may be personal financial demand on employees, just as the bonus or cash inclusivity linked to their performance, and even economy unsatisfied, including the ongoing basic process, may impact consumer confidence and spending habit. This could put pressure on the TESCO to maintain sale and profitability in the challenging economic environment that many inclusion found. Finally, according to the article, it is said that TESCO have one dominant potential in the UK retailer sector, come under their from their rival with more 10 billion, wipe out the market value in the 2014 after announcement last year. Its first annually profit fall in the 2 decades. Second, opportunity. Witness in TESCO, internal control and corporate governance produce may have created opportunity for farm. This may be due to weakness and lack of oversight in financial report and auditing production. Even TESCO have been criticized for not having sufficient oversight of the financial report process, such as insufficient check and balance, lack on segregating of dirty and poor supervisor, which allow accounting irregularities can be treated for significant period. This witness may have give someone to the opportunity for potentially the company financial statement and manipulated financial data for their own gain. Even action by not providing sufficient information to shareholders and other stakeholders, another in financial report perspective. Based on the article, some analysis has speculated that incredibly sign disputing, evaluating, and having pulled forward payment to paint a more frustrating picture of the supermarket finance. That rationalization found that may have used the variant justified to explain their action. This made their like to commit from the late action to achieve the financial target set by the corporate because they think it's possible to achieve those legal mean. their evil statement is being forced to achieve the set target is justified to commit accounting irregularity by claim that there 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 are other pressure to make financial targets set by the company. Addition, they may have forced to justify their behavior, the believing that statement financial inaugurated the temporary and can be fit later. That the fund is undergraduated all that their activity to the financial reward what that will result from the fund. Based on the article, TESCO can book conditionally supply commodity to achieve the sale target that will be not be achieved. This is because some employee realize that their seller target will not to be reached. Make agreement with the supplier to make their payment by offering benefit in the net financial period. They pay benefit keep secret and in the worst case scenario in a TESCO could actually paying back the money to the supplier in the net period. Lastly, it is a career to remind that fund is unlawful and unethical, and there is not excuse to including in it. The pressure, opportunity, and realization listed about the unjustifiable, justified, and profile, and there who again in the fraudulent act should be laid illegal limit for their action. To effectively pressure the identify the fault, the organization should have also had a strong internal control, ethical corporate governance, production, and clearer transparency and responsibility. Thank you, and it will continue with net presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Amirul Zakuan bin Barum, and I will be continuing our presentation with the content for the consequences imposed for the parties that involved in the TESCO case. When a firm commits fraud, any linked parties who participated in or supported the fraud, such as the directors, the officers, employees, or third-party service providers, may face legal penalties. This involves both civil and criminal culpability, as well as penalties and imprisonment. The first one is the auditors who's in charge in the company. In the aftermath of the TESCO scandal, the company's auditors, the PricewaterhouseCoopers, were brought into doubt. There were questions about whether the corporation did enough to bring the issue to light sooner. In the year of 2017, the United Kingdom's Financial Reporting Council (FRC) launched an investigation into PwC's audit of TESCO's account, and it was concluded in 2018 with PwC failing to call TESCO's accounting practices into question and failing to collect sufficient information to justify the value of TESCO's assets and liabilities. Then, the FRC fined PwC £10 million as a penalty and issued a severe reprimand as a consequence of the problem. Apart from that, PwC was required to carry out a number of corrective steps in order to improve audit quality and ensure that similar concerns do not occur in the future. This included the appointment of an independent monitor to oversee PwC's audit work, as well as the requirement that the corporation regularly report to the FRC on its progress in adopting corrective measures. The second one is the company itself. Companies that fail to comply with the provisions of the law may suffer significant penalties and repercussions. In the case of TESCO, the company had major consequences, both financially and in terms of reputations. TESCO's share price fell after accounting errors were discovered, wiping billions of pounds of the company's market value. The United Kingdom's Financial Conduct Authority (FCA) penalized the business £129 million for violating listing laws, and it agrees to repay shareholders injured by the deception. The issue gave a huge impact on the TESCO reputation. As a result of the negative press, the company's reputation suffered, and it faced criticisms from shareholders and the general public for its corporate governance shortcomings. The controversy also resulted in the departure of several senior officials, including the company's CEO at the time, Philip Clark. The third one is the management in the company. Public corporation management has a variety of responsibilities and obligations, and failure to comply with these standards can result in substantial consequences and penalties. Some of the consequences of non-compliance with the law include financial penalties, criminal penalties, for damages, and loss of damages. Several senior TESCO officials were implicated in the accounting mistakes exposed in the TESCO scandal. In the year of 2017, 3 former TESCO executives were charged with fraud and false accounting in connection with the scandal. Then, all 3 of them were found guilty and sentenced to prison in 2018. Carl Rothberg, the former financial director of TESCO, United Kingdom, was sentenced for 4 years in prison, while Chris Bush, former TESCO United Kingdom managing director, and John Scowler, former commercial director for food, were both sentenced to 3 years in prison. The former TESCO executive faced a huge financial fines in addition to criminal accusations and prison sentences after the Financial Conduct Authority (FCA) penalised the company a total of £129 million. The executives were ordered to repay any profits made from the misleading accounting practices. The incident also had substantial influence on the executive involved's careers. All 3 of them were fired from the TESCO in 2014, and their subsequent criminal charges are likely to have made it difficult for them to find work in the retail or financial sectors. Next, the fourth one is the shareholders. Shareholders has faced an indirect impact on the case of TESCO. After the fraud was uncovered, many investors who own shares in the company has suffered significant financial losses. After TESCO's stock prices will plummet, causing many investors to lose their whole life savings. Shareholders brought numerous lawsuits against the corporation and its executives, seeking recompense for their losses. TESCO's share price plummeted once the abnormalities were revealed, taking billions of pounds of the company's market value. The United Kingdom Financial Conduct Authority has penalised the company £129 million for violating listing regulation, and they agreed to compensate shareholders harmed by the scam. TESCO agreed to pay £85 million in 2017 to resolve a lawsuit brought by a group of institutional investors who has claimed they had lost money due to the company's misleading accounting. Apart from the financial losses suffered by the shareholders, the TESCO case had a significant impact on TESCO's reputation as one of the largest retailers in the United Kingdom. The negative publicity surrounding the incident has caused investors to lose faith in TESCO, and it took some time for the corporation to restore its position as a retail industry's leader. The last one is the business partner or suppliers of TESCO. A business partner may suffer financial damages as a result of the deception and file legal action against the company and its representatives. As a result of TESCO's strategy, the business admitted in 2014 that it had overstated its profitability by £293 million. It was later discovered that some of this overstatement was caused by the accounting handling of supplier payments. TESCO was accused of delaying suppliers' payments in order to boost business profits and of recognizing some of these payments as income before receiving them. Following the revelations, several of TESCO's suppliers raised worry about the impact of the accounting irregularities of their operations. Some suppliers allege that TESCO put them under pressure to agree to delay the payments, and that as a result of the company's activities, they have experienced financial losses. The scandal called into the questions retailers' ties with their suppliers, and there were calls for increased transparency and accountability in supply chain practices. TESCO responded by making a number of changes to its supplier relationships, including a new code of conduct and a dispute resolution ombudsman. The consequences for TESCO's business partners were severe, with some suppliers losing money as a result of the accounting errors. That's all from me. Thank you. I will pass back to the next presenter, Imran.
In conclusion, at the end of our presentation, TESCO accounting scandal was a significant event that shook the British business community. The fraudulent actions of the executive, the three senior managers, caused a significant financial loss to the company and also negatively impact shareholders, employees, and customers. The scandal highlighted the importance of corporate governance, financial transparency, and ethical practices in the business world. The TESCO accounting scandal is a classic example of how a company can fall from the top due to the unethical behavior by the management. Companies must establish strong ethical principles which is done at the top, and the shareholders must continuously and improve the communication with the management to actually oversee their action. And they also needs to improve the process of hiring an external auditor to make sure that the senior management produce a did not produce a misleading information in the financial statement. Regulators and government organizations must also make sure that businesses are held responsible for their conduct and that suitable sanctions are applied for non-compliance. A sizable fine was imposed on TESCO as a result of accounting scam, and several people were also charged with crimes related to the fraud. We hope that this will be an example to the management of the large corporation out there to make them think twice before they make a fraud like this again. Thank you so much.